China's chip market is busting at the seams to kick off 2026. The AI chip designer Shanghai Biren Technologies made its debut on the Hong Kong Stock Exchange today, raising some $700 million through its IPO. Get this, that stock finished up 76%. Meanwhile, we should look at Baidu. Baidu is surging 15%. It's on track for its largest percent increase since March of 2022. What's going on there? Well, the Chinese tech giant is planning to spin off its semiconductor unit, Kunlun Xin, and list it in Hong Kong. These moves come as U.S. restrictions on chip exports to China are now pushing firms toward domestic alternatives. What's the trade? Does this mean you should hold on or ditch your U.S. semi stocks? Let's find out. Joining me now with $3.2 billion in assets under management, Infrastructure Capital Management CEO Jay Hatfield. Jay, we saw this coming, right? Because we saw the tariffs and we knew that China was going to basically put Chinese companies that needed chips under their thumb, and Beijing would say, start buying Chinese chip companies. And now they're blossoming. What does that mean for U.S. chip stocks?
Happy New Year, Liz. Thanks for having me back. Well, we're still bullish on U.S. chip stocks, particularly given that the valuations really came in over the last couple of months. They're rallying hard on this news that you mentioned. But we like Marvell. It trades only 25 times earnings, benefits by having application-specific semiconductors.
Custom.
Right, apps custom, which can be more efficient for AI. Broadcom got cheaper, had gotten to our target, and NVIDIA is actually still quite reasonably priced, even though there are restrictions in China. But the rest of the world is a huge opportunity. It's sold out. And so we think people are too negative on the chip stocks.
And Reuters reported that NVIDIA has something like 2 million chip orders from Chinese companies for the H200, which is the one that's been approved by the U.S. for sale in China. So you're saying people who are on the U.S. chip train might stay there, at least?
Absolutely. I would watch valuation. We sold some Broadcom at 400 and we bought it back at 320. So just pay attention to valuation so you don't get burned by overvalued stock like Tesla, for instance.
Let's leave the chip sector and go elsewhere. What other stocks do you like?
Well, as you know, last year we really liked the investment banks, and that worked well. They are fully valued, like we're saying, focus on valuation. What's really cheap are regional banks. We do think the Fed's going to cut 3 times. We're super bullish about inflation. Think it'll roll down to 2.4% in the first quarter. So real surprise on inflation. And that's going to benefit regional banks, higher net interest margins. And even though it's super boring, we think they're going to do well this year.
Citizens Financial, listen, right now it's up 1.6%. But again, this is a regional that you like the balance sheet.
Right.
What would you avoid in these last 10 seconds?
Just don't be too conservative. Don't be higher risk fixed income, higher risk equities, and enjoy the rally.